Welcome to The Interest. I'm Ryan Kingsley. Today is Thursday, which means our own Vincent Valvo has pulled his chair to the fireside to bring you poetic moments in mortgage. After that, we'll take a peek at what the markets have in store by smashing the crystal ball. Speaking of crystal balls, imagine you could forecast where housing demand will rise or fall in the future. Imagine you could predict where home prices are expected to appreciate or depreciate years before that happens. What if you could predict your borrower's next move? I had the opportunity to speak with Gregor Schubert, an economist at the University of California in Los Angeles, whose new research shows that from 1990 to 2017, workers fleeing surging housing costs in any major job center, like Los Angeles or Boston, relocated to the same target cities year after year. And, he says, where workers go, housing booms follow. Here's the story. Over the past couple of years, Boise, Idaho has hit the headlines as one of the nation's hottest housing markets. In reality, Boise has been a hot housing market for the past 3 decades. Why? Because of historical migration patterns between Boise and large, job-creating metros that Schubert calls superstar cities.
In effect, the ability for you to find a more affordable place will be a function of sort of where your city of origin is located.
In other words, workers moved to Boise because they began in Los Angeles. But then, why did a housing boom follow in Boise's regional housing market?
Migration ultimately sort of works as an escape valve or arbitrage mechanism for spatial differences. So if one city becomes expensive, workers look for more affordable housing elsewhere, and so that ends up sort of spreading some of that initial house price impact to other places.
For mortgage lenders, understanding these specific historical links between major metros and regional housing markets can inform their branching, risk, and recruitment strategies.
So to the degree that they're all exposed to the same shocks, those are probably not housing markets that you all want to be exposed to at the same time, because they'll all go up and down together in some ways.
Pritam Purohit, head of hedging and analytics at Embrace Home Loans, agrees. Forecasting home price escalation can help lenders expand into areas where they know they'll be profitable.
Most of the work that goes into a 250K is the same that goes into a 500K. So that's why, all else equal, I would rather have a higher loan size than a smaller loan size.
Combining historical migration patterns with other borrower information, like income level, ethnicity, or field of employment, can help tailor these strategies even further.
To where, what if you notice all of the sudden, right, that this certain ethnicity is really making this, big move into this area? Well, ding, ding, ding. In my mind, that says, why wouldn't we cater to that by A, recruiting loan officers that speak that same language, right? B, if there's an educational opportunity, right?
Read more about how regional home price escalation is linked to national migration patterns in Mortgage Banker magazine, available now at mortgagebankermag.com. For The Interest, I'm Ryan Kingsley.
Angel AI is revolutionizing the home financing process. Here to tell us about it is Pavan Agarwal, the CEO of Celigence, the company behind this new amazing app. Tell us how Angel AI is helping the home financing process.
We use empathetic AI technology, so Angel AI understands the emotions behind human inputs so that the application to approval to close of a mortgage is nearly free of human touch and free of human error, and is lightning fast compared to the manual standards of the real estate industry today.
What about the people who have found it hard to get a mortgage?
Angel AI has made the approval process for mortgages fair and transparent, such that we have cut the decline rates for minority communities by half relative to the national average. Just go to angelai.com or click the Ask Angel AI Now button and ask Angel AI your home finance questions, or simply ask her to send you one of these cool free t-shirts. Angel AI has transferred the home financing business and made it fairer and easier for everyone.
For The Interest, I'm LaDonna Lockard. Avoiding whiplash this week with the economic news, especially as it relates to jobs, feels like a feat in and of itself. Just last week, the January jobs report came in with shockingly high figures, surprising many economists. With over 353,000 jobs added to the U.S. labor market, it seems to be resilient despite higher interest rates. But then this week started with rounds of tech industry-related layoffs as many tech companies begin to right-size their employee pool. DocuSign, Amazon, Zoom, and Snap are just some of the recent companies making personnel adjustments after the pandemic-fueled hiring craze. With advancements in AI, tech companies are redirecting their funding and resources to better align with AI development. Right on the heels of this week's tech layoffs comes the Fannie Mae Home Purchase Sentiment Index findings, which has increased 3.5 points to the highest level since March of 2022, currently sitting at 70.7. This is primarily due to consumer confidence in their feelings of job security and consumer expectations of mortgage rates declining in 2024. With all of that back and forth data, it can feel tough to assess what exactly this year may hold. Thankfully, the Fed doesn't solely take into account what the labor market is doing and takes a more comprehensive approach to analyzing the data around inflation rates. Despite their best efforts, inflation rates are still higher than they care for, but it seems we're posed for more of a soft landing than a crash. For The Interest, I'm LaDonna Lockard.
In the world of loans and mortgages, a change is on the way. AI's saucy touch will revolutionize the game, they say. No more paperwork and waiting, no need to fuss and fight. AI's seductive prowess will make lending feel just right. With algorithms sizzling hot, they'll analyze your credit score. In the blink of an eye, your financial history they'll explore. They'll calculate your risk and rate in a manner so divine, making sure your mortgage terms are perfectly in line. No more tedious meetings with bankers, no need for endless queues. AI's efficiency will leave you free to sip your morning brews. Approval will be swift and sure with interest rates so low. Mortgage lending in the future, oh, how it's set to glow. So as AI's alluring charms enchant the mortgage scene, embrace the change, my friend, and let it reign supreme. With saucy algorithms guiding loans, you'll find it quite enticing. The future of mortgage lending with AI is truly mesmerizing.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.